Finance and Investments Committee meeting roll call. Chair G. Wade Wooten.
Present.
Mr. Charles Brown. Mr. Hunter Thomas.
Here.
A quorum is present.
Okay, looking at the agenda for today's Finance and Investment Committee meeting, no old business is noted. New business, we have minutes from committee meeting minutes from April 20th, 2021. Let's see. Copy of which is attached to the agenda. I don't think there was any formal action, anything substantive. I'm just looking really quickly. Yeah, I don't see anything of note. So I guess, Hunter, would you mind, I guess, making a motion to approve the minutes from April, whoops, let me get the minute date, from April 20th, please, and I'll second it.
Mr. Thomas?
Yes.
We need a, we're trying to get a second on the acceptance of the minutes of April.
A second.
Thank you.
Okay, great. Obviously it's unanimous because only two people here. So that said, rolling to the next agenda item, Finance Dashboard Report. And then Byron, I think you're gonna present on this.
Yeah, good afternoon, committee members. Before I present on that, I wanted to give a update on the audit, which it should be on the agenda, but I'll go ahead and provide an update before going into the market report and the financial status report. So we started the audit engagement on May 4th. Of course, we didn't have the meeting last month to provide that update, but we did start on May 4th. And it's been being performed remotely. We've fulfilled most of the provided by lists, the PBC list that they request. That list tends to change day by day, but we've satisfied most of the requests for that list, as well as provided the samples that they requested. And so as of yesterday, there's still a few outstanding items that we're working through. If we can get some of these items hashed out between today and tomorrow, the auditors feel pretty comfortable that they can provide a draft of some preliminary financials. So one of the items that's outstanding is the Louisiana compliance questionnaire, which is a standard housekeeping item that nothing changed year over year, but ideally the treasurer, the board chair, and the executive director sign this document. So I will be sending that questionnaire out so we can get that going within the next day or two here. And then the other item is the related party questionnaire, which I have received some back from the board members, but there are some that's still outstanding. So I'll be reaching out to those board members who have not provided that back within the next day or two to get those items. And then the remaining items are just some depreciation and AR balances we want to make sure that we shore up. So so right now, pending that we get these items, squared away and refined within the next day or two, we still look like we'll meet that June 30th deadline. If there's anything that changes, I'll definitely keep the committee and the board updated and let you know.
Thanks, Byron.
Yeah, any questions?
Nope. I guess, Byron, before you send it to me, I assume, I guess you and Damon will have approved. You said there was, I guess, the Louisiana compliance form.
Yeah, Yeah, I'll basically fill it out. It'll be filled out. And so Damon and I will, review that before sending that to you.
Okay, great. Thank you so
All
much.
right.
Hey, Byron, before you move on from the audit,
Yes.
I just want to let the board members know and compliment Byron and his staff for the work that they've put in on getting us to this point. If you recall, last year, because of the pandemic, the audit deadline was pushed back. I believe we didn't approve the audit until November of last year, October or November. So Byron and his team essentially had to turn right around from last year and complete this audit. So they've been working double time and overtime on getting us to this point and getting us back on track with having a timely audit, as we were and we always endeavor to do before the pandemic. So I just wanted to recognize Byron and the finance team while we're on the line. Chris, Clarice, and I know many others. Naj helps out on the finance side. Tamia and many others participate in that process. So thank you.
Thanks, Dan.
I do have one question. So the board, it's got to be submitted by the end of June.
Yeah, it has to be submitted by June 30th.
So we have a board meeting, I guess. I mean, I guess the question is, doesn't the board have to approve it before it's submitted? I can't recall.
Yeah, no, in the past, it wasn't approved by the board. It's just reviewed by the board. But there's no approval.
Okay. Or like it's ratified after the fact or something like that. Okay, fair enough. Okay.
But I will, if I can get if we can get the draft this week, I will present the draft and let you see the draft. Generally, right now, once the draft is presented, it goes through a series of quality control checks where it goes through several layers with the management and the partners. So we're in a tight window, but it looks like, we'll be able to meet it, but I'll let you know otherwise. And I'll send out.
And usually the focus is, are there deficiencies, material deficiencies? So, knock on wood that you won't have material ones.
Yeah, and I haven't, I've asked last week, if there's any, a lot of that doesn't come out until the draft, but I have asked if there's anything so far. And at this point, they said they haven't found anything, like real material. So we'll keep our fingers crossed.
Okay, great.
All right, so we'll move on to the market update. All right. So, as it relates to the market, relatively the recent data has been very strong over the past month. The ongoing vaccine rollout is allowing a lot of states, a lot of economies to gradually open. And then with the fiscal support, it's resulted in a big jump in just economic activity overall. So we're seeing, some inflation pick up in the market. That's caused some volatility. There's been some supply shortages that's come along with the reopening surge that's been driving those prices higher. The Fed seem to believe that this supply and demand imbalance is just temporary. It's transitory, and they just feel like it's from the pandemic disruption. So it's short term. The market, given that minimal concern from the Fed, they're still kind of keying in on the consumer inflation expectation and just overall wage growth. So they want to see whether these high prices are going to kind of move throughout the summer. And so it could be, if that does happen, that the Fed may be forced to kind of bring a premature into this growth, by maybe easing off the asset purchases. So the market's kind of tuned in on just those data points, primarily the CPI number and the jobs number. So just keep an eye on the inflation. As it relates to rates month over month, mostly across the board, we saw lower rates in treasuries, lower rates in munis. Mortgage-backed rates have been, low for quite a while now. The 10-year treasury moved down 21 basis points to 1.43. We saw the muni 10-year point drop 13 basis points to 0.89. And then we also saw with those two drops, There's both movements. So the muni treasury curve, which is kind of an indicator evaluation, it stayed relatively the same, and overall is kind of low, given over the historic, historic view of that ratio. So it's kind of getting out of whack a little bit, actually, when you're thinking about relatively cheap or expensive. And then mortgages, they're still low, relatively low. They came up slightly throughout the month and then came right back down. One thing that's been interesting is that mortgage applications have actually declined. It could be a result of just restricted inventories or just the increase in home prices, but there's been a drop in applications, and there's also been a drop in refi apps. So we'll keep an eye on that as well. And then overall muni demand has stayed relatively strong across the curve. On a local front, the unemployment rate actually increased month over month. It increased to 11.1% in April from the 9.7 that it was in the month prior. That's a significant decrease from where it was last year at 19.7, of course, with the pandemic. So that's something we'll be keeping an eye on as well. But on a positive note, it looks like the city, the sales taxes are up. I read that recently, and I also read that they have actually received their first portion of the $375 million stimulus. So no word on how that's allocated at this point. I haven't seen anything, but we'll be trying to figure that out too. Moving on to the next page. This page provides kind of just a look at the long-term and short-term interest rates. It's kind of what I just went over. You'll see overall, just month over month, a decrease in rates on a long-term end and short-term end. You'll also see month over month rates. They just move lower overall from the 10-year lows, and they're kind of leaning toward but are below the averages, the 10-year averages, but they're leaning more toward the 10-year low side, just indicating that we're in this low cycle. Next page. And this just shows the muni curve. Once again, it just shows the month over month move in the municipal curve. You'll see rates have trended down, and that bar graph at the bottom just shows that toward the end, the steeper end of the curve or longer end of the curve, rates move just further than they have in the short end of it. But overall, they move down. Next page, please. Any questions on the market update? It's getting serious out there. All right, so we'll move to the financial status report. This is the year-to-date report, year-to-date April. So what you'll see here is the comprehensive look at the revenues and expenses. You'll see revenues year-to-date of $66,000 to a budget of $134,000. So that's a shortfall of $68,000, primarily driven by the multifamily line, which we didn't have any pilot closings. We do have some pilots in the pipeline, so that could be potential forward revenue for us. On the expense side, expenses year to date was $603,000 to a budget of $740,000. So that's a favorable variance of $139,000, primarily driven by most line items there, as you can see. Favorability in the salaries line of $28,000. And I made a note here of as we pulled out the community support fund expenses, there were $1,000 in community support expenses during the month of April. And year to date, we've expensed about $11,000 as of May, actually. Next page. So this shows our 13-month trending on our revenues and expenses. You'll see we gapped up a little bit in April. That was primarily driven by the consultant and professional services line. And that's related to our legal expenses, which is, there's a timing issue there. So you'll see the previous month, there wasn't any there. That's just a timing issue. So over the course of the year, that balances out. But outside of that, everything is within average range. Next page. Our balance sheet composition, nothing much to report here. The composition remains fairly stable year over year. Next page. This is our Pathways portfolio year to date. Revenues, which is primarily our interest from our accounts, is $863. And then we have our ongoing expenses in that portfolio, $17,000 year to date. And then finally, we have our cash and cash equivalents. And as of April, our ending balance on our cash position is 10.4, which is down slightly, roughly 119,000 from the prior month of 10.5. Any questions on the financial status report?
None for me. Hunter, any comments, question?
No comments here.
Okay, great. Thanks, Byron.
No problem. That concludes my report. Thank you.
I think that's it. I mean, Damon, unless there's any other issues on your end, Damon.
Just a few things to put on your radar for future meetings. We are, as we launch this new strategic plan, and we're working with the city and many other governmental agencies right now, we're building a pipeline for all of our programs. So as we build that pipeline and we try to turn that pipeline over into community investments at scale, that's going to require some internal capital. So a lot of our focus over the next half of the year is going to be in budgeting, operating budgeting, as well as capital budgeting, which is something that we haven't. Wade, I don't think we've ever officially adopted a capital budget in our past, and we don't have to per our rules, but it is something for us to have as a good practice as an agency. So that's something that Byron and the finance and the other parts of the leadership team are working on to figure out how much capital we need in order to create that $1 billion impact.
What do you mean by capital?
So what I mean by that, Wade, is, for example, on the Green Mortgage Program, which, by the way, launched yesterday. So we are ready to start pushing that program forward. The lights are officially on. But for the Green Mortgage Program, the down payment assistance is a key part to us providing a competitive offering to the community. So in order for us to maximize what we offer on down payment assistance, we need to put up some of our capital along with the capital that we're getting from the market to create the most impactful package. So that's an example where we need capital. Also, for multifamily projects, in order for us to issue the bonds that we have in our pipeline, there's going to be a requirement for credit enhancement at some point. Regardless of the channel that we go through, there are capital requirements for us to issue bonds if we want to issue them competitively and consistently. So those are just two examples, not to mention the new areas of our business model, which include green infrastructure and innovation, where the different types of capital needs is evolving. But at the end of the day, in order for us to create $1 billion impact, we are going to need some internal capital, different types of internal capital to push it forward.
I mean, would this be financed? I'm still old fashioned. So would it be, I mean, so it either comes from our own current reserves, or it would come to bond financing or something else. I guess if it's through some sort of other external financing, would we, in the past, I mean, it's been a long time because the interest rates have been so low. In the past, bond counsel, somebody would actually provide some advice with regard to, I guess, the contemplated structure of whatever the financing mechanism is. I don't know. I'm just trying to share with you.
Sure. Well, there are different levels and different types of capital that we need. So just to give you a quick overview, let's call it initial or startup capital. We need one, capital to continue funding our operations. Byron just presented on the fact that we have $10.3 million in liquidity, or $10.4 million in liquidity at the moment. And we've been trying to protect that as much as possible. But in order for us to grow, we need to invest in more people. We need more technology. We're ready to upgrade our old building on Barone Street. So there are many investments that we need to continue to make over the next 3 to 5 years that can't be funded in the bond market. So we're looking for capital from the city of New Orleans. We've been talking to the city about providing us a portion of their general obligation bond issue. We've also been talking to the American Green Bank Consortium, who is the champion on a National Green Bank Act. And the National Green Bank, once it's created through and funded through President Biden's infrastructure plan, some of that capital is going to flow down to us as flexible, long-term capital, flexible and patient, long-term, low-cost capital.
Okay.
And then there's also capital out there from banks that need to make community investment act investments or impact investments. So we're going to be making different types of asks to get us off the ground. And then as we get off the ground, it's going to be what you're accustomed to, Wade, where we're issuing bonds, you know, once, twice a year on single family and multifamily. We should be doing it throughout the year. And green infrastructure, we should also be doing it throughout the year. So we just need to continue to lay that foundation in order for us to move this plan forward.
So basically, you're just diversifying the source of capital financing from just beyond the bond market to some other sources as well, which is innovative.
That's right. That's right.
Yeah,
And a lot of
and
agencies are going that way. Sorry.
Yeah,
Brian.
and just to add to that, we want to approach, equity sources as well as debt sources, but ideally we're looking for as Damon mentioned, the patient, the low cost. We want to approach grants. That'll be the priority, and then low cost. There's a lot of different products out there, innovative products, equity equivalent products that the bank have, which allows for just low cost loans over a long period of time. So that'll be the priority. But ideally, we need to, as Damon mentioned, we're going to formulate this fundraising and capital plan, and that'll be all laid out there.
Okay, great. Thank you. I just hadn't been involved on that end, so it's just interesting to see the planning that's been underway. Thanks. Anything else, Damon?
Nothing for me. Thank you, everyone, for your time today.
Okay. Hunter, anything from your end?
Nothing from me.
Okay. Well, that's the case, then the committee meeting is adjourned. Thanks, everybody, for your time and effort.
Have a great day.
Take care.